Yeah, good morning, everyone. So again, US market has seen some knee-jerk reactions. Yesterday, market opened positive, and even when the Indian markets were on, futures of the US market were positive. But during the day in US, the market came off and ended in negative. Main impact was on account of higher bond yield, which continued to move up and reach to 2008 level. And also some of the results also came bit poor, so that has impacted the US market. But apart from that, if we see Asian markets are also indicating some softness. Uh, and even but the commodity markets are indicating some positive trend, wherein oil is at marginally up as compared to same time yesterday, and but the other commodity like iron ore and steel are showing positive trend. Iron ore is up by around 1.5% and steel up by around 0.5%. uh, so overall seems more of a mixed day. We may see sideway movement in today's trade in India as well. So request now technical team to take up from here.
Yeah, thank you, sir. First of all, happy Diwali for all. Today we expect a positive open, and we saw that yesterday Nifty sustained the closing above 17,550 level. So we expect further rally towards 17,670, 17,700 in upside. Immediate support place around 17,440 and 17,350 at downside. Below 17,350, then we expect further sell off, maybe towards 17,100, 17,000 at downside. But that immediate support for Nifty. So we watch closely, but we expect towards Diwali, we are Nifty trading with range, upside range around 17,700 and 750 and downside 17,350. Bank Nifty also face immediate resistance around 40,500, and yesterday managed to close above for 40,200. To expect further next immediate resistance 40,500, 40,750 in upside, and immediate support place around 40,000. Nifty Finance also trading near the resistance zone, and first immediate resistance place around 18,140 and 18,200 in next resistance. Support place around 17,970 and 17,870 at downside. Stock specific, UPL looks positive. ITC also looks positive at current level. SRF also looks positive. We already given call in SRF upside 2680 target 2530 stop. Camps also looks positive. We already given call 2621 and target is 2840 and 2510 at downside stop loss. That's it for technical derivative I can carry.
Yeah, thank you. Good morning, everyone, and happy Diwali to everyone. So, as per derivatives data front, we are seeing that in the yesterday's trading session, a strong pullback has been witnessed in the second half. While if you look at the overall OI positions, we are seeing that the major strike call writer positions are getting liquidated, while against that put writer positions are getting added up at 17,500 and 400 level. So, this indicates that there might be a strong buying, but the resistance is being placed at 17,600. If in today's trading session, if Nifty manages to get stable for some time also about 17,600 level, then the range is definitely will get shifted on the upper end towards 17,800 to 900 level on the upper end. While on the downside, the support is placed at 17,400 level. But put writer positions got added up yesterday strongly at 17,400 level. So 17,400 will act as an important supportive zone. Currently, as per the PCRY, PCR yesterday closed at 1.22 level. So PCR till the time it's getting managed to close above 1.15 level, till that point of time, we might witness some positive stream in the market. So currently in today's trading session, market looks positive, and if Nifty goes above 17,600 level, we can initiate fresh long positions in today's trading session, while India VIX is continuously trading below 18.5 level from previous two trading session. So this seems to a positive indicator. So currently, if we look at the overall derivative data points, it looks positive for today's trading session. So you should create a long positions and should hold a long position with the strict stop loss of 17,400 level. As per stock specific and sector specific, we have seen that the cement sector has shown some positive um, and strong pullback in yesterday trading session. So we expect from cement counter, Ambuja Cement and India Cement looks positive. While from the banking stock, we expect PNB and Bank Baroda to show some positive strength in today's trading session. Thank you.
Good morning. There is news on PNB Housing Finance that Mr. Girish Kousgi, who was earlier the MD at Canfin Homes, will be joining as the MD and CEO. Previously, he has also worked in various roles at HDFC, ICICI Bank, IDFC First, Tata Capital. And if we see his record at Canfin Homes, when he joined in 2019 end, the company was struggling with low growth, low margins. But Mr. Kousgi managed the situation well and addressed both the concerns during his tenure of almost 3 years there. So this will be seen as positive for PNB Housing Finance. Axis Bank result is above expectation on all fronts. NII grew 31% year on year, 10% QOQ. NIM came at 3.96% and improved 57 basis points year on year and 36 basis points quarter on quarter. NIM expansion was supported by higher growth in SME unsecured loans and credit cards, as well as steep increase in credit to deposit ratio. A large part of the NIM expansion seems to be sustainable, although with CD ratio at more than 90%, now bank will have to grow its deposit by increasing the cost of deposit. So that can put some pressure, minor pressure on the NIM uh, going forward. After many quarters of constant growth in OPEX, this quarter it was flattish QOQ and increased by 14% year on year, leading to operating profit growth of 30% year on year. Asset quality improved on all parameters, and ROA, ROE came at multi-year highs of 1.8 and 18.5%. So if looking at the stock valuation at 1.6 times FY24 price to book, we think there is a scope for a decent upside over here, and stock can re-rate to around 2 times going forward. Bajaj Finance result was in line with expectation. Advances growth was 31%. OPEX growth was contained, leading to pre-provisioning profit growth of 36% year on year. They said that competitive intensity in the consumer B2B business continues to increase. Few years back, there were just 4 to 5 players in this B2B consumer business. Today, there are around 17 players present. However, company remains confident of maintaining its market share. Also, the customer franchised along with loan book has also increased. It grew by 19% year on year to 6.3 crore customers now. Company remains focused on increasing the franchise to around 10 crore customers in the medium term. And they also said that they will be focusing more on mining existing customers through cross-selling. So overall view remains positive. Aavas financial result was okay. AUM growth was stable at 22%. However, asset quality was stable. Q2 is typically good seasonally for asset quality point of view, but yeah, it did not show any meaningful improvement like we saw in the case of Home First. So from short-term perspective, stock may remain range bound, but from long-term point of view, we are positive. UTI Asset Management Company result has declined. Although AUM grew 4% quarter on quarter and company maintained market share, the top line growth was flattish and OPEX growth was higher in the quarter, resulting in EBITDA declining by 8% sequentially. Although performance declined in the quarter, we remain positive from long-term point of view because of the company's focus on index funds and ETFs, where the inherent industry growth itself is pretty high and company is gaining market share in that particular segment. So short term may not do anything much, but long term remain positive. Shriram Transport Finance result was in line with expectation. AUM grew 11% year on year. After many quarters, we saw disbursement growth also picking up, and year on year growth has now picked up to 20% against the regular kind of trend growth of 10%, which we have seen since last 3 years. This should result in AUM growth accelerating slightly from single digit last year to around 13-14% going forward. NII and pre-provisioning profit both grew by around 22%. and profit grew by 38% because of lower credit cost. NPA was flattish. Valuation remains undemanding at just 1.2 times trailing price to book. And with CV upcycle likely to sustain over next couple of years, we remain positive on Shriram Transport Finance. Thank you.
Yeah, good morning and happy Diwali to all. Sagar Cement has had its con call yesterday, wherein the management has maintained its volume target
Acha.
of 5 million ton in FY23. The the company received its pet coke shipment few days back, which was secured at $169, as compared to the current spot price, which are hovering around $195. Uh, the company expects to save around 250 rupees per ton in power and fuel cost for Q3. Also, the company will save around rupees 50 to 60 rupees per ton in freight costs. The company took a price hike of rupees 15 to 20 rupees across its market in October. The company has a planned maintenance capex of 300 million for FY23, out of which 100 million has been spent in the first half of FY23. Also, the company is in the process of acquiring Andhra Cement assets, which will take its total capacity from 8.25 million ton to 10.85 million ton. The stock is trading at 8 times FY24 EBITDA. We are neutral on this company. Apart from this, Welspun Corp has commissioned dispatches from its DI pipe through its wholly owned subsidiary Welspun DI Pipe Limited. The capacity of the plant is 400,000 ton. This is positive for the company. Thank you.
Yeah, I will just jump in. I missed a few results on the PSU banking front. So yesterday, three PSU banks along with South Indian Bank came up with results, and all four results improved on loan growth, NIM, as well as asset quality front. So all around, we are seeing that the whole sector is having pretty good results. But from these four tier two banks, we think that Canara Bank can outperform, as that their ROA has inched up to 0.8% against 0.6% witnessed over last 2-3 quarters. So there is some decent scope for re-rating in Canara Bank. So although we remain positive on the whole banking sector and all these four banks. Thank you.
Good morning. Coforge has posted inline set of numbers for the quarter, and for the year, the company has reiterated its annual revenue growth guidance of at least 20% in CC terms, and EBITDA margin guidance to be in the range of 18.5 to 19%. Outlook is neutral on the company. Zensar Technologies has posted marginally below expectation set of numbers, majorly on the margin front. Revenue came in at 155 million, which was similar in last quarter. However, EBITDA margins has dipped to 8.5% versus QQ of 11.3%. The call will be held today. Company last quarter had guided margins to improve to mid-teens in around the second quarter of FY24. So any outlook on that would be the key thing to watch out for. Mastech has posted marginally ahead of expectation set of numbers for the quarter, with dollar revenue coming in at 78 million. EBITDA margin came in at 17.2% versus expectation of 17.8%. Stock is trading at a PE of 13.3 times FY24 EPS. Thank you.
Yeah. So Asian Paints has reported results, and result was below expectations. Revenue came at 8,468 crore versus the expectations of 8,941 crore. The impact was largely because of the extended monsoon in quarter 2 FY23, especially in west and south regions. It has added 8,000 new retail points in first half in order to enhance the distribution network, which is positive for the long-term revenue growth. During the quarter, economy emulsions and undercoats dominated the market, along with the premium luxury ranges in wood finishes, waterproofing, and select emulsions. EBITDA margin came at 15.3% versus 12.7% in quarter 2 FY22. Festive season demand in October remains a key growth driver for Q3 FY23, and pickup in construction activities are expected to drive the growth for B2B business, while wedding season will give rise to consumer sentiments. So we are long-term positive on the stock, while we will continue to monitor the raw material pricing scenario for the near-term tailwinds. The stock is trading at a PE of 56.6 times to FY24 EPS. Colgate-Palmolive has reported results in line with the expectations. Revenue came at 1,388 crore, grew by 2.6% YOY. EBITDA came at 29.4% versus the expectations of 28.9%. Um, we are positive on the premiumization category expansion into personal care, which is a key growth drivers in the near to medium term for the company. And it has an innovation pipeline with the launch of Max Fresh Charcoal in this quarter, combined with continued impetus on Palmolive face wash and electric toothbrushes. The stock is trading at a PE of 35.4 times to FY24 EPS. Overall view remains positive. The Clean Science and Technology Limited reported result with the marginally above expectations. Revenue reported at 247 crore with a 60% YOY growth. And it was backed by a combination of good volume growth and improved realizations across all segments. The revenue mix remained at similar level of exports at 75% and domestic business at 25%. EBITDA came at 39.4% versus expectations of 38.9%. Margins were largely impacted due to the inflationary pressures on raw materials, energy, and power costs. The stock is trading at PE of 46.8 times to FY24 EPS, and we are positive on the stock with the long-term view. Thank you.
So, apart from this, few more results and comment from management in the con call. So if we see Havells India, management has given the reasons for decline in margins. That is mainly because the high cost inventory got absorbed in this. And from here on, they don't see high cost inventory impacting their performance. But management has also indicated that they will be looking more for the growth than to the margins, and specifically in the Lloyd AC. Where they are looking to capture the market. They are already at number 3 and want to move up from here also. Sales growth anyhow in this quarter was also good. If we see 3-year CAGR, it was at around 18%. As compared to pre-COVID level CAGR of 18%, which seems quite positive. And in that also 12% was volume growth and 6% was price increase. So things are quite seems positive for the company in long run. Though short term, because of the poor results, we had seen some corrections, and we may see some more corrections in near term. But any good decline can be used to accumulate this stock for a longer period. Then apart from that, United Breweries has come up with the results. Though the sales were, this is generally an off season for them. Q1 is the strongest quarter, wherein in summer season the beer get consumed maximum. In these seasons, comparatively a softer quarter. But if you see, the margins has shown improvement quarter on quarter, so that has come positive, and that has increased by almost around 200 basis points, and this was highest in last 4 or 5 quarters. So that shows a lot of cost increase which has happened is abating for the company, and the valuations are a bit demanding at around 51 times. So outlook is more of a long-term positive for the company. Then Tata Consumer came up with the numbers bit soft in this quarter. In fact, volume growth in brewery segment in India has come at negative 1%, whereas the expectation was positive 1%. So anyhow, the volume expectations was quite low, and because of the higher base in the last year, and on that the volume growth has come a bit lower than the expectation. So stock may remain bit soft in the today's trade, but long term continue to remain positive because of their strategy to diversify in different products, and which is yielding some results. Then Aarti Drug came up with the numbers, and here we had seen the margin stabilizing. We had seen margins coming off in last 4-5 quarters. Their general margins were at around the 16-17%, which came off to almost 10% last quarter, and this quarter it sustained over there, and we saw some revenue growth quarter on quarter in this quarter. So management in the last call has also indicated that the margins in the Q2 will bottom out, and from Q3 onwards, that will start seeing some improvement. So that seems to be on course, and the outlook from here seems to be positive for Aarti Drugs. Then another company, Symphony, came up with the numbers, and the numbers were declining. Margins came off a lot. But again, this is an off season for Symphony. The peak season is Q1, wherein there's Q4 and Q1, wherein they sell a lot of air coolers. The result got impacted mainly because of their international operations, which saw some negative trend over there. But management has indicated that some sales have shifted to third quarter. Because of that, the negativeness has come, and that will come back in the third quarter. And apart from that, the key thing to watch in this is that in the last peak season, that is in main season of heat summer, company has not taken any price increase, and has seen a lot of inventory unwinding at dealers level. So now the inventory level in the market is quite stable and at the pre-COVID level. And in the next season, they will be taking up quite a bit of price increases. So the coming quarters may see a very good bounce back, specifically in the third quarter and fourth quarter and the next year first quarter. So we are seeing the stock is underperforming for a quite bit of time. But what we see there from here, that the opportunity is coming for the company in the coming period. So outlook is positive for Symphony. Then Super Stop also had a con call yesterday, and the outlook is positive. In fact, management has indicated that the growth from here, what the company will be targeting is opening up of around 12 to 15 stores in coming period, and we'll be looking for another beauty store also opening up in the similar around 15 beauty store they will be opening. So both together will be driving the volume growth. Apart from that, SSG will be increasing by around 5 to anywhere between 5 to 10%. So overall, seems like company is looking for a growth of anywhere between 15 to 20% in the revenue, which we had not seen in Super Stop in last 10 years. So because of the change in management, and Venu Nair, who had come from Trent, has changed the face of the company, and we are seeing quite a bit of performance of the stock post our recommendation. But we continue to remain positive on Super Stop from here also, as the valuations are at around 11 times EV by EBITDA FY24, which is not yet, which is still attractive, and there is a scope for the growth also. So overall, Super Stop also looks positive from here. So anyone else from fundamental side, or we'll hand it over to commodity? So anyhow, thanks and have a happy Diwali. Now I'll hand it over to commodity team from here. Anyone from commodity team?
Sir, nobody seems to be there from the commodity team.
Yeah, Riya Singh name is.
Yeah, but she is not in office.
Okay.
We can't see her. Yeah.
Okay, then we conclude the call, and thank you very much and have a good day.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.